Take us to our talk of the tape. To cut or not to cut, and when? A key question the Fed is no doubt grappling with these days. So let's welcome in Nick Timiraos. He is the chief economics correspondent for the Wall Street Journal. It's nice to see you again.
Thanks for having me, Scott.
So I guess we'll get some clues in the morning with CPI, which you say is especially important this time around. Why?
Well, remember, we're lapping those very high prints of 1 year ago. And in the last 2 years, we've come into the year thinking, all right, inflation is looking better. It had declined at the end of 22. It was declining a lot at the end of 23. And then forecasters and the Fed were sort of hit by these rude, firm inflation prints at the beginning of the year. So I think the question now is there something going on where we are in the business cycle, the high inflation we've had, that is leading to larger turn-of-the-year resets, or are we through all of that?
Well, the other problem is, of course, as he continues to say, is they don't really know what the impact of the tariffs is going to be, no more than anybody else does. So that just muddies the water a bit in terms of their road ahead.
Yeah, 100%. I mean, put aside the tariffs for a minute, Scott, and if you were able to get through this first quarter with 3 reasonably good inflation numbers, you know, the forecasters I talk to say you could be at 2.3 or 2.4% year over year on core PCE for the March reading that we're going to get at the end of April, right before the May meeting. So if you had, 2.3% or 2.4% core CPI, I think you would feel pretty good about the economy. Again, assuming the labor market's hanging in there, we're at 2.8 right now. So I think the conversation, the narrative would change quite a bit if we had 2.3 or 2.4% core PC inflation. But as you note, then you have this sort of question of, well, what about the tariffs? And are we even going to get to the promised land of something below 2.5% on inflation with some of the tariffs that are beginning to move into the system?
Cut through the Fed speak as you do so well. When Powell says he's in, quote, no hurry to make their next move, what do you think he's really thinking about? The probabilities in the market suggest nothing's going to happen in March, but that it's really anybody's guess after that. What are your own thoughts?
I think that's exactly right. It's anybody's guess. What Powell seems to be doing here is just maximizing his optionality. He can do whatever he wants depending on what happens in the numbers. So you get really good inflation numbers and, the economy's doing okay. There still may not be a reason to move. We heard that message from Dallas Fed President Lori Logan last week. You see more weakness in the labor market like what we thought we were seeing last summer. Maybe that puts interest rate cuts back on the table. You see inflation going back up because of tariffs. And again, I think you can see why the Fed chair would want to have all of his options open right now.
Well, not only that, I thought it was very interesting. I think it was late last week when Chicago's Goolsbee essentially said, you know what, we've kind of learned our lesson from what supply side disruptions can do to inflation. That's exactly what the pandemic bore for the Fed. And that was the conundrum in thinking that, well, we need to crush demand when in reality it was mostly supply driven. Do you think that that has changed the way that the Fed thinks about what its job truly is and how difficult it is to assess things like tariffs and disruptions that they might cause?
It has to at some level. I mean, somebody said to me, well, they're going to fight the last war again. In 2021, they were fighting the war of very weak growth after the GFC. Now the last war would be you don't want to have a big, ugly, right tail inflation surprise like you had in 2021. So that would lead you to be more cautious. And that was what you were hearing from Austin Goolsbee. The person making the other case on the other side of this is Fed Governor Chris Waller, who I know you've had on the program, and he's made the point we should look through this. The Fed should simply say this is a one-time increase in the price level, and you wouldn't necessarily want to dramatically change your monetary policy. I think the question is going to be, how do you define look through something? Do you keep cutting into it? Because that's what the SEP would say. If you're really going to look through something, you shouldn't do anything different from what you were going to do. So the SEP would say keep cutting. What you hear from most of the people on the committee who are talking about this right now, I don't think they would cut into a big increase in tariffs. And so that would freeze the Fed, for some indeterminate period of time.
Maybe it's the unknown of sorts that, frankly, I thought one of the most interesting things today out of the hearing in Senate banking was what Powell wouldn't say. And I want you to listen to this exchange. I have a feeling you know where I'm going with this, but let's listen to this back and forth between Senator Kennedy and Chair Powell, and we can talk on the other side.
The fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others.
Well, have we experienced a hard landing?
No, we sure haven't.
Are we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does.
Thought that was really interesting, that exchange, Nick. Why doesn't he take the credit? Why is now not the time to declare victory?
Well, I don't think he's ever going to declare victory. What's to be gained from doing that? It could all, fall away at some point down the road. But I agree with you. That was the most interesting exchange of the hearing. If members of Congress are unhappy with the recent conduct of monetary policy, and you think back to the 50 basis points in September, some people said it looked political. Maybe you didn't need to do it. I mean, that was where the commentary was going. But if members of Congress are unhappy, you sure would not have been able to tell from most of what lawmakers said at the Senate Banking Committee this morning. And so I think that just speaks to, the economy doing fairly well. And if you go back 2 years and you told the Fed, this is the, economy you're going to have, they would have given their left arm for it.